Good morning, and thanks so much for tuning into the trade setup. I'm Niraj Shah. Let's take stock of the markets. They don't seem too bad, but underneath the hood, few issues here and there. Let's look at what happened overnight. Fed officials said that higher rates are needed to reach the 2% inflation goal. Used car prices in the US tumbled the most since the start of the pandemic. This is, well, anti inflation, if you will. Sugar prices eased on good Brazilian harvest and steady shipments. And iron ore, as per Morgan Stanley, will drop to $90 on oversupplied markets. If anything, the one commodity that actually did well or went up was rice. As per a Bloomberg alert, rice has soared to a 2-year high in Asia on El Nino drought risk. So, well, watch out for sugar stocks, watch out for rice stocks. If there were used car stocks in the US, then those could have reacted as well. But what the US markets did overnight is important. So they didn't have that bad a day. About a quarter of a percent for the S&P 500. The Dow was much higher there. Nasdaq wasn't. The other Qs were, I think, steady as they went, but will come up on a screen in a moment. Yeah, VIX at $15 index, 101.5. So from 102 to 101.5, and the 10-year yield staying above 4. So no big changes there. The gift nifty is should be indicating a flattish start. Yep, 19,489. So just about that levels. And by the way, this shouldn't surprise people, and I'll tell you why. Because okay, let's get the trade setup plate, and I'll tell you why this shouldn't surprise people. So one, we're seeing that if the markets are moving higher, there is profit taking happening. Yesterday in late trades, we saw profit taking at the higher levels, erasing most of the early gains. Uh, the interesting thing is the highest put OI is at 19,400 strike. The highest call OI2 is at 19,400 strike. So no big changes uh, uh, from that perspective per se. And in fact, if data is correct, then FI sold quite a bit of index futures yesterday. The 26,300 crores nearly worth of index futures getting sold. As per one of the experts, FI sold about 2.19 lakh contracts of call and 42,000 contracts of put, and shorted OI addition to the tune of 1.73 lakhs. So there is a fair degree of short buildup that's happening from the foreign institutional investors on the derivative side on the index, never mind what they're doing on specific stocks and fundamentally on the cash market. Now, therefore, it becomes imperative to be cautious on very large leverage longs. But what is smart money doing beneath the hood? Well, infra and EPC stocks are now coming in as a bit of a call option. There are two, I mean, yesterday on this news of Vijay Kedia increasing the stake in Patel Engineering, that stock ended up much higher, right? People would have seen that. People are talking about how some of these infra stocks are being traded as a call option, that people are buying into it, smart money is buying into it with a perspective that if they lose about whatever small amount that they've bet in relative to their size. But if the gains happen, then the gains could be disproportionate. So that's the call that people seem to be making. I would suspect that sure that could work well, and these guys know what they are doing within sectors. Therefore, try and study infra EPC companies if you want to, but also be mindful if you have long positions in the spec chem space, because it is advisable to be cautious around that pocket ahead of earnings season. And I'll tell you why a bit later on. Um, Results today: Elecon Engineering, PCBL, and Plastic Blends India. So a couple of small names really. The main results start from tomorrow, but more importantly, even tomorrow post-market hours. So effectively Thursday is when the first reactions of the result season start coming in. Today, the Adani Group stocks could be in focus. The Hindenburg issue is hearing the court today, and the GST meet today. Some newspaper articles suggest that GST Council will likely clarify on on the supply of F&B at cinemas, taxable at what rates. Does that impact PVR positively? Maybe there's some clarity around cess on SUVs, so that should come about. So all of this could be important for both sets of stocks. Standard disclaimer, of course, the Adani Group owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which you are watching this broadcast. Now, stocks to watch today. Well, Vedanta becomes top of the list. Foxconn is not going to move forward with the India chip JV with Vedanta. This comes as a dampener. Vedanta, on its part, has said that they're committed to the semiconductor fab project and they've lined up other partners for the chip facility. But I would suspect that this will not sit well with the stock today. We could see a bit of a corrective move there. How deep? Not sure, but we could see a bit of a corrective move there. McLeod Russell, they say that they're in exclusive talks with Carbon Resources for monetization of certain assets of the company. Watch out for that. Like I said, watch out for rice stocks because rice prices have soared. So the Dawats, the KRBLs, LT Foods, etc., would be in focus. Then Nazara, they're going to raise funds by way of issuance of equity shares aggregating to up to 750 crores through one or more QIPs or preferential allotment or through a combination thereof. Now, they haven't said that what will the size of individual QIPs be, but typically when companies are going to raise funds, there could be price movement, so watch out for that. Vadilal has issued a clarification on a media publication saying that Bain Capital is in talks to buy the ice cream maker. No unequivocal denial, as you see. They've stated that as on date, no other event or announcement has occurred, which mandates a disclosure under this regulation 30 SEBI LODR regulations. So no denial. That's the key point. And therefore, maybe there is no smoke without fire, but I'm not completely clued in on this. I haven't studied Vadidar Industries or the need for funds or somebody's interest there. So please, I have no particular view. But yes, I have a view on the announcement that they've made. It isn't a denial. So that's to be kept in mind. Then yesterday we were talking about unseasonal rains and the impact that it could have. Motilal Oswal on certain companies. So Motilal Oswal came out a note on Varun Beverages, which I thought was interesting. So they say that unseasonal rainfall coupled with lower temperatures compared to last year can lead to muted volumes growth in second quarter calendar year 23, which is the current year, which is the current quarter. They say, however, realizations are expected to increase on the back of growing mix of energy drinks, food-based drinks, and value-added dairy products, coupled with a higher share of smaller bottles. So let's see, do they show higher realization and lower volumes both? And does the market not like the lower volumes? Which is possible, by the way, because Varun trades at premium valuations now. The only thing is, this could be a, how do I say, this, yes, so this is a peak quarter, and this quarter shows a large miss. It could be taken negatively, but also depends on the commentary from Varun Beverages. They're doing a lot of right things, so never know. I just thought I should bring it to the notice of our viewers that we were talking yesterday about how unseasonal rains would impact cooling solution companies, etc. Even these companies like Varun Beverages are not quite saved from that issue. But I thought Motilal Oswal pulled it well, so I thought I should get it to you. Now, I was telling you about spec chem companies and why people should be careful. Remember, 21st June, we highlighted what the CEO, what the company of Lanxess, which is a global spec chem major, had said. They had brought down their EBITDA estimates for the year quite dramatically, nearly 30 to 33%. Now, Evonik, which is a German spec chem company and a large one at that, the CEO is saying that during the first quarter, there were signs of business recovery for the remainder of the year. Unfortunately, the recovery turned out to be much weaker in May and June than we had expected. Our contingency measures prevented a more significant earnings decline, but we are feeling the effects of a slowing global economy. Viewers, I must tell you, if it's happening to a German company, Indian companies, no matter how good they are, will not be bereft of this. Some companies might be able to ride the storm better, maybe fluorination companies, maybe some others based on their commentary earlier. But please be careful about spec chem companies which are exposed to the global markets. Be careful about agrochem companies which have a large global exposure. The numbers may not necessarily be the strongest, and therefore you've got to be careful about these stocks, especially if you have large leverage longs in them. So please be mindful of what the spec chem sector by itself is going through. So that's to be kept in mind as well. Are there some other stocks that I've missed? So APL Apollo has gotten some incentives worth 500 crores from the Chhattisgarh government. Maybe that stock reacts a little bit. I was trying to see if there is a brokerage note that I have missed out. Yeah, there's a JP Morgan note on ER&D stocks. They are reiterating their stance earlier. Remember, at 900 they'd come out with a negative note on KPIT, and they downgraded the stock to some 500. From there, the stock has moved to circa 1100. But JP Morgan is saying that They believe the ERD spend slowdown seen over the last 6 months is structural and not cyclical, which makes the current valuation super rich. They see significant de-rating potential ahead, and they reiterate their underweight stance on LTTS, Tata Elxsi, Persistent Systems, and KPIT. Well, let's see if JP Morgan turns out to be right or no. Their target on KPIT is 540, which is half from the current levels. Tata Elxsi 4600, that is about a 40% downtick. LTTS about 2900, which is 26% downtick. Persistent, a more benign, relatively benign 4100, which is about a 15% downtick. Let's see, maybe there's a bit of a reaction on KPIT today. So that's to be watched out for as well. So some notes which I thought were important. So lots of stocks which could be in focus today. Be mindful of some of those, especially the rice growers and the sugar companies, if you will. Vedanta for sure. Um, yeah, and some of these summer related stocks. So maybe even vanilla ice cream makers may not have had the fantastic quarter one. So be careful of that. Thanks so much for tuning into the trade setup. A bunch of conversations lined up during the course of the day. Aditya Suresh of Macquarie joins in on Talking Point to talk about his thoughts. So that could be an interesting conversation. We have a conversation later on in the day with Axis Cades, which is uh, talking about some, I hear it's talking about some aggressive growth plans. So that management will be in conversation today. You might want to tune in for that. And of course, like I've said for the last 2 days on social media and on here, that some very promising conversations lined up on the 13th on BQ Prime at the India Opportunity Conclave in Mumbai. For people who can attend, please do write to the teams and they will send the invites if it's possible to do so. But like I said, fear not. It's right up there on BQ Prime and NDTV platforms for you to be able to watch those conversations as they happen, and during the course of the next 10 days, hear out a slice of what is to be anticipated at the India Opportunity Conclave.
We all know about the India opportunity, but how large could this opportunity be? How long can the cycle run? And how deep are these options for investors? We try to get the answers from Niraj Shah, Saurabh Mukherjee and Sunil Singhania to these questions at the India Opportunity Conclave on the 13th of July. We all may know which stocks to buy, but do we have the jigra to bet big when we spot an opportunity? How do the large investors who really bet big on an opportunity get up the resolve to put so much of money at work? We try and talk about the mental models of some of the biggest investors in a conversation with Ramdev Agarwal and Manish Chokhani at the India Opportunity Conclave on the 13th of July.